This is Jaimini Bhagwati. I am reflecting over the next few minutes about the Adani Group and the Hindenburg Report. Now, as we all know, there was a bloodbath in Indian stock markets in the last couple of weeks. But rather than getting into the specifics of how much each stock went down and so on, let's take a step back and reflect on what has happened and what does it all mean. Now, Hindenburg, I think it is headed by someone called Nathan Anderson. And this group headed by Anderson, they have done some other studies too. I think they did one on Nikola, an American company. I think it was an electric lorry firm. And later on, the founder of that firm was convicted of fraud. And then there was, I think, also some company called Lordstown Motors. I think it was a car maker which had overstated its orders. In both cases, Hindenburg was proved right in terms of having zeroed in on companies which were not quite playing cricket, so to speak, by the book. Now, what does Hindenburg say? The Hindenburg report says that the Adani Group of companies has far too much debt, that its debt coverage ratio and the interest coverage ratio, for those who are not familiar with that, it is nothing but a ratio which shows what the earnings are divided by the amount of interest which has to be paid. And so obviously the higher the ratio, the better the health of the company. But unfortunately, as it happens, Hindenburg is right that the Adani companies do have these two crucial ratios which point to some kind of difficulties that these companies are in. And just to remind viewers, I think the Adani Group has about 7 Indian listed companies, and it has multiple subsidiaries. The Hindenburg Group is also supposed to have shorted Adani securities. Were these debt securities? Were these equity securities? It's not quite clear. I have tried to scour around, look at various websites, but I can't seem to find where exactly Hindenburg could have shorted these securities. That is Adani Group company securities. My own guess is that they possibly may have done it in the derivatives segments of foreign stock exchanges. However, even if they had done that, it would have come to the notice of regulators there or here, or the Adani company personnel themselves. So since it was so quiet, maybe they did it through foreign institutional investors in a proprietary mode. But how would the FIIs, for those who are not familiar with the term, foreign institutional investors are registered with SEBI and they can invest in Indian stocks and also participate in Indian derivatives markets on these two major exchanges, for instance, National Stock Exchange and the Bombay Stock Exchange. Now, my guess is that perhaps this talk about shorting is overblown. Now, having said that, it is a fact that the financials of the Adani Group companies look stretched. Take another number, which is the price earnings ratio. I talked about the debt service coverage ratio and the interest coverage ratio. They don't look healthy. But look at the price earnings ratios of some of the Adani companies, which shot up to as much as 300. Any number above 20, people start looking carefully. Above 40, alarm bells start ringing. So if the price over earnings is around 300, something seems to be somewhat out of the ordinary, something which doesn't add up. Now, if those are the price earnings ratios, and the Hindenburg report came out, I think, on the 24th of January, and I think 27th of January, the Adani Group had a public offering, and then by budget day, 1st of February, things were unraveling as far as this offering was concerned. It's another matter that finally the offering was fully subscribed. The Adani companies gave back the money, saying that the stock prices have come down very sharply, in some cases by 40% and so on. So it would not be fair and it would not be morally right to bind the investors to a share price which was way above the market price. Now, the price earnings ratio of 300 times, and the stock was included in Sensex and also in the Nifty 50. Now, Sensex, as you know, is about 30 companies, and the Nifty 50 by definition is 50 companies. You might say that what does it matter if the major Adani companies are part of the Sensex or part of the Nifty 50? Now, I think you would know that many mutual funds offer schemes which are essentially the index, the stock market index. So the investments in those particular mutual fund schemes, and individuals too, invest in the index itself. That means they don't want the risk of investing in individual stocks. They invest in the index. And that means the stock exchange it's the stock exchange. The Bombay Stock Exchange decides which companies would be part of Sensex, and the National Stock Exchange decides which companies will be part of the Nifty 50, and so on. There are other indices too. Now, if you have included very risky stocks there, and mutual funds are obliged, if they are going to follow the index, to invest in Adani stocks, ipso facto. Now, I would have thought that the board members of these stock exchanges would be a little more careful in terms of the kind of, it's not that the sizes of these Adani companies don't meet the requirements. It is just the risk profile of the companies don't meet the requirements of being part of a stock exchange index. Now, I am very surprised about the working of the boards of the National Stock Exchange as well as the Bombay Stock Exchange. And I would like them to make public what are the reasons that they felt the Adani stocks, despite their risk profile, merited inclusion in these two indices. Now, stock exchanges, you might say, oh, but they are listed. For instance, BSE is listed, NSE is not yet listed. So they are maximizing profits for their shareholders. So why should anyone be concerned about what they are doing? It's up to you whether you want to participate in a mutual fund which is tracking the Sensex or any Nifty index. My sense, this is my personal view, and as it happens, a former governor of the Reserve Bank, Bimal Jalan, he headed a committee which labeled the stock exchanges as market infrastructure institutions. By that, the committee felt that the first port of call in terms of surveillance and in terms of detecting any wrongdoing for listed companies are the stock exchanges. But anyway, okay, so that's as far as the stock exchanges are concerned. Now we come to the boards of the companies themselves. It is surprising that the boards of these companies have not flagged the extent to which these companies have exposed themselves to the possibility at an extreme of a default on the debt that they have taken on their balance sheets. That is the independent directors of all these companies. As I mentioned at the beginning, there are 7 large companies which are listed on Indian stock exchanges. They are Adani Ports and Adani Power and so on. Now, the other group of people are the auditors. There are internal auditors and there are external auditors. So one would have expected that they too should have been a little more careful in terms of okaying the accounts of companies which appear under normal circumstances. By normal, I mean by normal yardsticks, to be exposed to a lot of risk. So I referred to the stock exchanges, their management, the independent directors on boards of these companies, and also about the auditors. Next comes the regulators themselves. So given the lack of free float, by the way, these companies, 60-70% of the companies are owned by the promoters themselves. So do they meet? Frankly, I cannot from the top of my head remember what is the minimum amount of float required. But the float, by float I mean the amount of stocks that are available in the market for somebody to buy and then correspondingly sell. The float is very little. So I would have thought that at some stage, since these companies have been around for quite some time, SEBI would have flagged this for the attention of the management and the ownership of these companies. And in fact, before this public offering, one would have thought that they would have pointed this out to the Adani Enterprises board. So there seem to be lots and lots of questions about this whole episode. Having said that, we might find at the end of the day that there are rational explanations for all the questions that I have raised, but instead of the market observers and opposition politicians shouting that there has been fraud, if they were to focus attention on these issues, including, I think, another entity which should have flagged some of the risks and points that I have mentioned, is the Department of Company Affairs. They too have a role in terms of companies which are over leveraged and which might, particularly if they are listed, be a source of volatility in the markets. I'm not even getting into the fact that the State Bank of India has invested, I'm told, 25,000 crores, I'm told in the sense of press reports, which is just a tad short, 0.9% of its total loans outstanding. So there's no danger to the State Bank of India. But again, it is surprising that the State Bank of India would lend to risk of this kind. Of course, State Bank, SBI could turn around and say that Adani Group is a very large group, and yes, there may be some risk involved, but there is risk involved in all loans that this large public sector bank issues. And similarly for LIC, but LIC IRDAI should be looking at, by IRDAI I mean the Insurance Regulatory Development Agency of India, I think, or maybe Authority of India. IRDAI should also have some questions to answer as to why is LIC, which is a listed company now, investing in companies which have such a high risk profile. Okay, I think I have hopefully piqued your curiosity and interest about what may in the years to come be called the Adani affair. Maybe it's a storm in the teacup, but as far as the health of the Adani companies are concerned, and maybe it is part of this company growing very rapidly. But having said that, there are a number of question marks over what the regulators were doing, what the board members of these companies were up to in terms of their responsibilities, and also the auditors. Thank you so much. Goodbye.